So for the first time, my Freetrade account has a total value of over £60,000. That's quite a milestone in my opinion for someone who's actually never worked a real job. My goal in the next 2 years is to get the portfolio to up to £100,000. Of course, there's going to be challenges such as the economic situation, but I think that's why portfolio updates are very important, because it shows you how the actual content creator actually invests with their real hard-worked cash. So make sure to smash that like button and subscribe for a lot more portfolio updates that are going to be coming, and I'm going to show you my strategies into how I invest with my money. So let's get straight to the portfolio. So firstly, we're going to look at my general investment account, and as you can see, the balance is £17,787. I am filming as always on a Saturday, so the prices shouldn't be fluctuating too much. So my previous balance on my GIA was around £16,000, so I deposited another couple thousand. However, the past month has been very volatile to say the least, and as you can see, there has been major fluctuations in my portfolio. So over the 7 days, you can see that I hit a peak of 18,000, and right now I'm back to around 17,750. So I'm just going to go through my individual investments. I still have 0.1 shares of Intel at £2.52. Still have 1.7 shares in CSN, which is down by around 30%. I bought 1 share in the iShares World Dividend. I am slowly getting into more dividend ETFs because I think I want to have more exposure to dividend paying companies, because in a time of recession like this, dividend companies are usually the more reliable companies in terms of income. So that's actually up by 0.37%, which is very surprising. I still have 1.3 shares in Gap, which is down by 18%. I have 1.7 shares in Kindral, and I'm not sure what the fluctuation is because it was a free stock. The value is always going to be plus 0%. I've been buying Royce because Royce hit a low of around 66p, and as you can see, I've bought 23 shares at an average price of around 67 to 68p, and I think that Royce is a great company because it is one of those companies that the world needs. Aviation needs Royce, rich people need Royces, and I think that Royce is going to do okay in the future. Even though it hasn't been doing great before the pandemic, I'm willing to take the risk on Royce, and even then it's only around £16 that I put in. There's probably more upside than downside on Royce. Again, this is not financial advice. None of my videos are financial advice. Xinhuan Real Estate, 42 shares, that is only now worth £21. That's a loss of 80%. Nothing compared to actually 41 shares in Aston Martin, which is down by 95.3%. Crazy, right? Crazy. That is a loss of £800. Crazy. Avaya Holdings, very similar story here, 47 shares, and that is now worth £51. So that's a loss of even more, 840. Satorna Al-Katwa Global Fund something, 10 shares, down by 13%, so not too bad. 19 shares in ESG Global, and that is down by 7%, but it's not too much value, so it's around £70. 85 shares in Clover Health, which is doing tremendously bad at minus 86%. Cognite Software, a technology company, so none of the technology companies are doing good. That is down by minus 85%, which is a huge loss. Wow. CrowdStrike is down by 2.1%, which is not bad, but it has been fluctuating a lot in the past, 7 days. So that's that. Fastly, another technology company, 20 shares, minus 82%, not good at all. AGM Holdings, 103 shares, down by minus 81%, which is very bad. I bought 11 shares in the Ftse 200, and that's not doing too bad, but I did buy it recently, and that's down by 1.25%. The S&P 500 VUSA is down by 1.67%, and that has been fluctuating like crazy, especially due to the fact that the pound lost so much against the dollar the other day. I made many videos on my channel about those kind of stuff, so make sure you do check them out. Because the dollar is so high right now, it's giving us a higher value on the S&P 500, so it doesn't look like it's been doing that bad. But in America, the S&P 500 is doing very bad this year. So Alibaba, 6 shares at £442 of value, and that's down 55%. Corsair, 41 shares, down by 54%, and Corsair is also a technology company. Metrobank is not doing too well either, 577 shares, and that's down by 41%. Alba Mineral, I have 345,823 shares. Crazy to say it, right? I have around 1/3 shares in Alba Mineral, and that's down by 41%. One Life, I have 37 shares, and the value is down by 36.6%. Shoals, another company, down by 25%. Baidu, which is basically Chinese Google, that's down by minus 19.3%, which is a lot less than the others, so it's not too bad. So iShares S&P 500, which is actually a currency hedged ETF, that is down by minus 20%, which is a very high amount, and that is more reflective of the American S&P 500 than the British one because it's hedging against the loss in currency. I bought 169 shares in the German DAX, and what I'm doing here, which is what I do with my ISA, is kind of making the most out of the volatility. So I've been buying a lot of, buying the German DAX and then selling the German DAX at a profit. So for example, here I bought and sold and made £16. I've been doing that in my general investment account and my ISA because I think right now the only thing that is happening is stocks are going up and down, up and down, up and down. So essentially I'm buying when I think it's a good price and selling when I think it's going to drop again. So either way, I kind of win because even if I buy low and the price keeps going down, I'm still going to hold it because I think it's a good ETF. If the price goes a bit high, I know it's going to go back down because of how volatile it is. So that I'm doing that, I'm making a bit of money. So that is not too bad. And that's kind of offsetting my losses at the moment. And I'll show you in my ISA that it's offsetting by a lot more. Finally, I have 355 shares of the Ftse Japan. And this is one of my biggest holdings in my general investment account. That is down by around £600. And I'm not sure what the mathematics of this is. So one thing to note if you're using Freetrade is to never ever rely on this number here. This number here says I'm only down by £62. That is not the case because I bought 355 shares of the Ftse Japan at £25 something. So never ever rely on this number because you will lose a lot of money if you rely on this number. That's something to take into consideration. If you look at my cash, there's not much cash left in my GIA. I don't really believe in holding cash a lot. Obviously, I have my emergency fund that is not in my investment portfolios, that's in my bank account, easy access. But £11.27, I'm going to maybe invest that into the Ftse 250 when it becomes a bit higher. So yeah, I'm not holding much cash in my general investment account. So now I'm going to go into my ISA, and as you can see, the value is £42,498.94. So it's around £450 up from last month. And you might be thinking, how on earth did I manage to do that? Well, I'm going to show you my technique, which I definitely do not recommend to other people. It works in my favor because I'm that kind of investor, but definitely don't copy my technique because at one point I'm going to be timing the market wrong and I'm going to be losing a lot of money in the other way because I could have made a lot more. So definitely it's a higher risk kind of game, so I don't recommend this at all. But as you can see from the fluctuations of the past month, my portfolio was crazy. So the last video I did was around here, £42,040, stayed still, went up, and then boom, it lost around £1,000, went up, it lost more, and then it shot back up. So I'm going to show you what the holdings are. So in my ISA, I usually only invest in ETFs, but however, there might be some other small holdings in companies. For example, Rolls-Royce, 3 shares. And the reason why I bought this in my ISA is because I had a few pounds left and I thought I might as well put it in Rolls-Royce because the shares are so cheap. I have 2,400 shares in Alba Mineral. I have 554 shares in Mast Energy, and that's down by minus 66%. I have bought 1 share in the Ftse All World High Dividend Yield, and again, I want more exposure to dividend stocks, so I might be buying more and more of this as the discounts roll in. The VUSA S&P 500, again, I bought 1 share and that's down by 1%. S&P 500 from iShares, that's the hedged one, and that's down by £4. I think I bought a few of these shares when the currency was tanking, when the pound was tanking, because I thought I want to buy something that doesn't destroy my returns when I buy it. I have 3 shares in Disney and that's down by 16%. I have 3 shares in Meta and that's down by 31%. So the rest is my strategy of how I'm actually increasing the value of my ISA in such a bad time. So the only given thing, like I said before, is volatility, right? The markets are going to crash. Everyone's saying the markets are going to crash, but I've realized that it might take a while for the markets to crash because everyone is waiting for the market crash. It's not going to happen. If everyone's waiting for it, it's not going to happen, right? Because if you follow the masses, you're only going to get an average return. That being said, what I do is I follow 3 ETFs. So that's the Ftse Japan, the German DAX, and the VAPX, which is the APAC excluding Japan. What I do is I buy them when I think it's a good price. So for example, I bought at £19.67 and then I sold at £19.73. So I don't make huge gains on these trades, but I think it is pure profit and it does kind of fluctuate within those ranges. I don't at all recommend trading because there are so many downsides of trading, but I've done so much research into it, I look into it so much, and I kind of know the fluctuations, and right now it's paying off for me. Another thing is I bought 253 shares at £19.71, which I think is a terrible price now because it's gone down, right? So there is no guarantee that it's going to go back up and I'm going to make a profit. But like I said, I'm a long-term investor. I'm a hybrid investor, so I do a little bit of trading, but overall my mentality is long-term, which means that even if it goes down, I don't care. I've already bought it at what I think is a great price. So I'm just going to keep holding on to it. And then if it goes down more, I'll just put in more money into it. It's a no-brainer for me. It's just, I win both ways, right? If it goes down, I win because I get a discount. If it goes up, I win because I get a profit. So I also do this with the Ftse Japan. So as you can see, I've put in a lot in the Ftse Japan. So £17,500, 733 shares, and it's down by 0.17%. So when the markets open on Monday, if it goes up to £24.20, I've secured my profit. So that's what I really like about Freetrade. And also, if you have Freetrade Plus, you can have more of these limit sales. So I always do limit sales as well. I put in a value which I think it was going to go up to. I might actually rethink the value here. It might be too high for the current climate. So sometimes I change the value of my limit sell. This was actually £24.11 before, and then I changed it. And I should have gone with my gut because it did go up to £24.11, not on this graph, but it did overall, and I would have secured some profit. It's a good way of making like £100 a day because of the sheer amount that I put in. Even small percentage changes do give me nice profit, and that is why my portfolio is going up in such a bad time. So if we look into insights, we can see that I've definitely been beating the market. So we can go to maximum here. So on my ISA, my money weighted return is 11%, which is very, very good. And as you can see, the green line is my portfolio and the other shaded one is the Ftse All World ETF, which is basically the entire stock market index. And as you can see, before I was trading with the index, but look at this, a flat line. So when the markets were going up and down, I was not moving at all. And that's because I held a lot of money in cash. I don't regret it at all, but I think that I could have made a lot more money during that period if I had done a lot of research and traded a little bit. But as you can see, I haven't been losing as much, nearly as much. There's a huge gap between me and the global index. And as you can see in the last bit, there's a bit of a spike when I started trading. So I can go to a 1 week preview and you can see that my returns are on average a lot higher than the total market index. Like I said, I am not telling anyone to trade. I'm telling people to continually invest their money and let compound interest do the work. Because at the end of the day, timing the market always beats timing the market. My plan is to get through this recession, and as soon as the bear market starts, just keep investing consistently. I want to show you my account. I'm still holding a fair bit of cash, but not as much as I was holding last time because I think that it's stupid to be out of the market because you really don't know if this recession is going to happen. If the recession happens, the best thing you can do is find an income from somewhere else and input that into your portfolio and make your gains there. Either way, we are in a recession and the market's already dropped 20%. So likely it will recover sometime in the future, that 20%. However, if we try to time the market, we're just going to be losing potential gains. The market might go through a rally and recover past the all-time high and it might never come again. So nothing is for certain. The only way to actually make money in the stock market is to continually invest dollar cost average. You've heard it so many times. You've heard it so many times, but honestly, dollar cost average. And also if you find a stock or ETF that you think is a great value, buy it up. And if it drops more, buy more. Make sure to smash that like button and hit that subscribe button for more portfolio updates. I'm going to be making monthly updates. I might even be making more regular updates on my Freetrade portfolio because now I'm so involved in it and I really want the value of my portfolio to be going up instead of down like you. Remember, this video is not financial advice. Make sure to check out some of my other videos and I will see you in the next video.